You were listening to Charting Wealth for the last trading day of the year, Friday the 29th of December 2017. What does that mean? Well, it's the end of the quarter. We will be recording for you over the weekend and posting our quarterly chart review for those of you who want to learn how to be long-term investors. That quarterly chart, which we have on the screen right now, those of you listening by audio only on the podcast, we so appreciate you. We'll tell you what we're looking at. We're looking at an amazing chart that would have gotten you out of the crash that started at the end of September in 2000, would have gotten you back in for the rise starting at the beginning of 2005, would have gotten you out in July, the beginning of July 2008 for the market crash, and would have gotten you back in for the big run-up starting in April of 2011. We also will be discussing the Trump effect, which is a really interesting thing to see. When he got into the race for president, the market was already turning over, going down. It's the only anomaly that we have seen over the last 20 years with the quarterly chart, but then it crossed back over going up, and it has been beautiful going on 4 quarters. So we'll tell you where things stand, what's up, and what to think about this. We'll also share with you that quarterly chart. And in order to get all that information, what do you have to do? Well, you need to go right after you listen to this, or even stop this video and go to chartingwealth.com, put in your name, your email address, and you will be on the daily market review email list, and you will get the link in that comprehensive review and forecast email over the weekend. Additionally, before we jump into these charts, I want to tell you a contest we're having. We've never had a contest before, and we've got a wonderful little prize for you. We've got to have a number of people compete. We want to have at least, we'd like to have well over 100 responses. And if we get that, we will pick out of those responses the best #1 response we get, both for quality and for overall feel for someone who's actually using what we do on a daily basis to help them learn to trade and to really apply what we're teaching here. And we would like to have your testimonials. Go to our Facebook page. That's Charting Wealth. You can find us on Facebook. And go ahead and start posting your testimonials. Those of you who are long-term viewers, or even people who've started over the last few weeks, that are listening on a daily basis, filling out the daily market worksheets, the weekly market worksheets, doing the best you can to do that using the trade worksheets and telling us about your successes. Guess what the prize is? You're going to get a call from me for 15 minutes of actual person-to-person teaching. Yes, you're going to get a teleconference with me, and I am going to hear what you're up to, what you're doing, deal with all your questions, and it may even go on beyond 15 minutes, maybe even go on 30 minutes. We will see. Depends on how interesting you are, and I know we've got a lot of interesting folks, but if you wish to engage in this, we're going to need to have large numbers of people, and you go to our Facebook page, put in your testimonial. It doesn't have to be long, but it needs to basically explain why you do this, what you do, and how it's been working for you. Because I know so many of you are having success in your training out there, practicing this day in and day out, and we appreciate so many of them. Many have been with us for years now, and we so appreciate that. We want to hear from you, and we want to give you something back in the new year. We're probably going to run this, for the next few days until we hit the number of 100 postings. And when we get that, we're going to pick the absolute best one. We'll announce it on the show, and I'm probably even going to record the phone call. And again, we'll make sure that if you have privacy concerns, we'll deal with all that stuff. But it won't be a problem. I'll make sure it's not a problem. So anyway, let's jump into these charts. We've already taken up a good bit of your time. But again, I'm just excited about the quarterly podcast coming up and the training and where these charts are. What do we see? Well, we see the S&P 500 up for the day nicely, 0.21%. As we look at the weekly chart, we're coming to the end of this shortened week. Again, we have a red open box candle. Things have just sort of slidden sideways, tending down. We see the price percent oscillator is flat. Derivative oscillators losing a little bit of energy. One more day to draw this weekly candle. But again, it's the first break we've had in 5 weeks. So again, we had one little pullback there for the week ending the 17th of November. And prior to that, just weeks and weeks of up movement. So again, interesting to watch. Is the market topping out, or is this just the last week of the year and things are slowing down? We'll see as we jump into the next week. What do we see going on the 2-day chart? Well, we see that the latest, the prior 2-day candle that drew on the 27th, that was Wednesday, we just had the first day of the latest 2-day candle. What kind of candle is it? Well, it's a green open box candle, but it's not been drawn yet, and it may be crossing over going down. Once the candle's drawn, we'll let you know if that was a 2-day crossover going down. Price movement has moved below the 2-day trend line, still well above the weekly trend line. So we'll see if we have a crossover going down or not. What do we see on the 4-hour chart? Well, it's actually moved up throughout the course of the day, bouncing off the 2-day trend line. If we have a crossover going up and strong movement on Friday, then of course you may have a jumping in point for more up move on the S&P 500, since we don't have yet a crossing over going down, so we're still in play for jumping in if there's some strong up movement on an up move, since the 2-day and the weekly are in up moves. We'll continue to watch. We have a pullback, a long running pullback on that 4-hour chart. We'll see what happens. Let's move on to the Qs. It's up 0.21% for the day, and so far the weekly chart is a doji. That means just lots of indecision. Is it indecision at the end of the year? Could be. Remember, we had our weekly vertical crossover all the way back on the 27th of October. The S&P 500 rolled over, rolled over going up about a month prior to that. So not as strong an up movement, or not as many weeks of up movement on the Qs as on the S&P 500, but still strong up movement for us. Nice gains. We had 2 weeks of pullbacks ending the 1st of December and the 8th of December, and the prior 2 weeks ending the 15th of December and the 22nd were nice up moves, but we have indecision and a doji. Could it just be the end of the year? Well, it looks like the weekly's trying to get close to crossing over going down. Has not happened yet, but it's getting awfully darn close to that. We'll see if it happens over the weekend. Of course, we will let you know in the comprehensive review and forecast. And for those of you who subscribe to our texting service available in the U.S., instructions that they are on the page for everybody who receives the daily email. That's the daily market review that you can sign up for. You will also receive a text message of that. What do we see on the 2-day chart? Crossover going down on the 22nd. The 2-day candle ended on Friday the 22nd. So far, the first day of the latest 2-day candle is a green spinning top, means tending up, although the derivative oscillator heading down, the price percent oscillator also heading down. As we tune into that 4-hour chart, what do we see? We see things have really just gone flat, bouncing off a floor of about 156.40 and ended the day at 156.74, something like that. So again, just really a sideways slide. So we'll see just how things continue to move. We don't have a trade right now on the Qs as far as our standard trading procedures go, because we have a confirmed down move on the 2-day, confirmed up move on the weekly. So we'll see how the 4-hour chart continues to pattern out. Now moving quickly along, I know we're getting short on time because I talked about so much at the beginning, but I do appreciate your patience. What do we see on TLT? Well, TLT appears to be going into its second week of down moves, but we don't have a crossover going down. In fact, things are sort of flattening out, where the price percent oscillator is moving parallel with the signal line. Derivative oscillators continuing to continuing to lose downward momentum. We see that we still have a confirmed up move on the weekly chart. As we look at the 2-day chart, what do we see? Well, the 2-day chart actually heading up on the price percent oscillator, even though it's in a confirmed down move, of course. Don't have a crossover yet. And then what do we see with the derivative oscillator losing downward momentum? We have 3 up candles. Now, again, it's just the first day of the latest 2-day candle, but when that finishes drawing, if it stays in the same direction, we see some decent up movement. So we'll continue to keep our eye on the prize. What's going on that 4-hour chart? Well, that 4-hour chart crossed over going up at the end of the morning on Wednesday, the 27th of December. Really hit its high in the afternoon that same Wednesday and has sort of been going sideways since then. For the record, TLT was down 0.09% for the day on Thursday. Derivative oscillator gaining energy, price percent oscillator heading up. So continue just to keep your eye on things. It's interesting to watch what TLT is doing. Why is that happening? Well, bonds tend to be a safe haven when the stock market's going down, and the market's looking a little bit shaky here at the end of the year. And again, it just could be this week when all the big folks that run things are still on vacation and you got the caretakers in there for the week and things are just sort of hopping around. But let's continue to watch and see how these charts develop, because the long-term trends are what we tend to focus on. Why? Because all things being equal, the market tends to move in the direction of the largest trend, and that, of course, is our weekly trend. Now, for the S&P 500, we do that quarterly chart trading, but that is a whole nother matter. Let's go back to our charts, and we will lastly look at gold, up 0.51% for the day, going to the second week of strong up movement. Don't have a crossover yet. May not have one by the end of the week. It'd be a lot to do to crossover going up on Friday, but if it's a boom up day, that could happen. Derivative oscillator losing downward momentum. Price percent oscillator heading up. Got what is shaping up to be a nice green up candle. Second up candle in a row in 2 weeks. We shall just wait and see what we see. As we look at the 2-day chart, we had that 2-day crossover going up. In fact, with all the strong up movement, we can actually track that to the 22nd, actually. And sometimes the crossovers will change. They will go away if there's lots of down movement, or they'll actually shift and move back if there's a lot of up movement. So again, just to keep track of it accurately, we have our crossover going up on that 2-day chart. We're also going to put a helpful trend line in there so we can track things. And again, not going to be able to connect 3 candles, but we can connect 2 price movement on this latest first day of the latest 2-day candle up strong, where you have 6 up candles, really 5.5. We have lots of growth in the price percent oscillator striking up, and the derivative oscillator also up strongly on that 2-day chart. And then what do we see on the 4-hour? My friends, that 4-hour chart, which historically stopped working for us around the 15th of December, crossed over going up in the morning on the 14th, and it has been beautiful. It is a couple of pullbacks in the afternoon on Friday the 15th of December, and then the morning of Tuesday the 19th. But other than that, striking up beautifully. Those of you who've jumped in and been doing your practice trades have seen incredible growth. What the jumping in point somewhere around, if you would have gotten in even the next morning, because it's hard to get in the at the end of the day, but if you had jumped in somewhere after the opening around 119 all the way up to 122.90, so again, not bad, about $3 over the course of a week or so. That's pretty beautiful. Again, love that 4-hour chart on gold. It is working this year and defying the past. Folks, that's where we are as we end the day. If you do want to be in that competition, we would very much appreciate your testimonials telling us about how valuable and how much help Charting Wealth has been to you in learning to read charts and practicing your trades. We would so much appreciate that. Also, if you're not already signed up for, you need to make sure you sign up for the daily market review so you'll get that quarterly chart training. We've gotten nothing but super positive feedback on that in the past. You want to be able to start learning to chart things in the long term, not just the short term, but in the long term. This is your chart. It works on the S&P 500. We've not found it working on other charts to date, but it is beautiful on the S&P 500. So please make sure to join us. Sign up, subscribe at chartingwealth.com. God bless. We wish you a happy new year from the entire team here at Charting Wealth World Headquarters. God bless, my friends.